Grab Holdings Limited is currently trading at $3.85 per share, representing an intraday increase of 0.78% as of 4:15 a.m. Eastern Time on May 1, 2026. While most of the market is fixated on the tiny green candle showing up on the chart this morning, there is a massive fundamental shift happening behind the scenes that most retail investors are completely missing. Everyone looks at Grab as a ride-hailing and food delivery company, but the real story right now is their aggressive pivot into the high-margin world of automated financial services. While people are arguing about driver subsidies and fuel costs in Southeast Asia, Grab just finished laying the groundwork to become a global fintech powerhouse by acquiring Stash Financial. This move effectively turns them into a competitor for platforms like SoFi or even specialized interactive broker services, but with a built-in user base of over 50 million monthly transacting users. The expectation in the market right now is that Grab is just trying to survive a tough macroeconomic environment in Southeast Asia. The reality is that they are quietly building a diversified financial ecosystem that could make their mobility business look like a secondary side project in a few years. If you look at the recent price action, we are seeing Grab hold steady near its 52-week lows, which creates a classic tension between the bears who think the growth story is over and the institutional bulls who are quietly accumulating. Over the last few hours of trading, we saw Grab touch a high of $3.84 and a low of $3.74, showing some volatility as traders position themselves ahead of the first quarter earnings report scheduled for May 4. The volume is starting to pick up, and that usually indicates that the big players are moving. When you see institutional activity like this, it's often because they are anticipating a surprise. The Zacks consensus estimate is looking for earnings of 3 cents per share, which would be a massive 100% increase over the same period last year. If they hit that number, the current $3.85 price point might look like a steal in retrospect. Many people using investing sites to track this stock are worried about the geopolitical tensions in the Middle East affecting fuel prices and supply chains in Asia, but they are ignoring the fact that Grab's delivery and advertising revenues are expected to surge by over 20%. Common market wisdom says that Grab is a risky bet because of its history of missing earnings targets. In fact, they've underperformed estimates in 3 of the last 4 quarters. That's the expectation that keeps the stock price suppressed. But here is the deeper take. Grab has been intentionally sacrificing short-term margins to consolidate its market share in the digital banking space through GXS Bank in Singapore and GX Bank in Malaysia. This isn't just about hauling people from point A to point B anymore. They are moving into the individual brokerage space. By integrating AI-powered investing tools, they are essentially creating a one-stop shop for online investing that targets the unbanked and underbanked populations in one of the fastest-growing regions on Earth. If you are someone who manages a Schwab Intelligent Portfolios account or trades on a Robinhood app, you understand the value of a seamless user experience. Grab is attempting to replicate that entire ecosystem for 600 million people in Southeast Asia. Comment below how many shares of Grab you currently hold, or if you think they can actually beat the big banks in the fintech space. The institutional ownership data tells a fascinating story. Currently, about 78% of Grab is held by institutions. When you see that level of professional backing, it tells you that the smart money is willing to wait out the volatility. They aren't looking at the daily swings between 370 and 390. They are looking at the 2026 roadmap that includes a full integration of Stash's AI Money Coach. This isn't just about ride-hailing, it's about self-investing and wealth management. While a lot of people are distracted by Tesla stock or Nvidia stock because of the hype, companies like Grab are building the actual infrastructure for the next billion consumers. If you've ever looked at a SoFi trading platform or checked your Fidelity investments, you know that the stickiness of a financial user is 10 times higher than someone just ordering a sandwich. Grab's mobility revenue is projected to be around $326 million for the quarter, but the financial services segment is seeing a 66% year-over-year rise. That is where the real breakout potential lives. To understand why this matters, we have to look at the business model. Grab operates in over 900 cities across 8 countries. They have a barbell strategy where they offer low-cost options like Grab Car Saver to keep the volume high, while pushing premium services like Grab Executive for high-net-worth individuals and tourists. This allows them to capture the entire economic spectrum. Their recent move to acquire 100% of Stash Financial is a clear signal that they want to offer intelligent portfolio services to the masses. Imagine a world where a driver in Jakarta can automatically invest a portion of their daily earnings into a diversified portfolio of Fidelity ETFs or Fidelity mutual funds through the same app they use to find work. That kind of vertical integration is something even the best investing sites in the US haven't fully mastered yet. It's why some analysts, like those at Citi, have maintained a buy rating with price targets as high as $7.20, which is almost double where we are today.
However, the reality check is that Grab still faces massive headwinds. Fuel prices are a constant threat to their mobility margins. If the conflict in the Middle East continues to escalate, Grab will have to increase subsidies for their drivers in the Philippines and Thailand just to keep them on the road. This is a direct hit to their adjusted EBITDA, which is expected to be around $146 million this quarter. This is the tension I mentioned earlier. You have the promise of a fintech giant versus the reality of a logistics company dealing with rising costs. This is why the stock has been lagging behind the SPX index, which is up 28%, while Grab is down nearly 20% over the last year. It's a classic value trap if they can't execute, but a generational opportunity if they can. Many people who use SoFi Invest or look for investment help are starting to eye these beaten-down international tech stocks because the valuations in the US market are getting stretched. Let's talk about the competition. In the US, people use a combination of Fidelity Wealth Management and maybe a Robinhood stock trading account to manage their lives. In Southeast Asia, there is no one-size-fits-all solution like Grab. Their digital banking arm is not just a side project, it's a necessity for millions of people who don't have a traditional individual brokerage. By offering Robinhood fractional share style investing through their app, they are capturing the online investment market before it even fully matures. This is why the recent institutional activity is so interesting. Even though the price hasn't moved much today, staying around that $3.85 mark, the underlying shift in revenue mix toward financial services is a massive catalyst. If you're used to the Fidelity trading platform or the Fidelity mobile app, you know that once you start an IRA or a brokerage account with a firm, you rarely leave. Grab is counting on that same loyalty. The upcoming earnings call on May 4 will be the moment of truth. Management needs to show that they can maintain growth in deliveries, which is estimated at $479 million, while simultaneously scaling their fintech arm without burning through all their cash. They have a healthy balance sheet, but the market is no longer rewarding growth at any cost. They want to see a return to GAAP profitability. If Grab can show that their winning with purpose strategy is actually improving the bottom line, we could see a massive short squeeze. There are plenty of bears betting against the stock because they think it's just another super app that will never make a profit. But they are ignoring the data. Monthly transacting users are projected to reach 49 million. That is a massive pool of potential customers for their new Grab Quick Cash personal loan offerings and their AI-driven investment guidance. If you are looking for investment help or trying to decide where to put your capital, you have to weigh the risk of a volatile international market against the reward of a dominant player. Most people will stick to what they know, Tesla stock or Apple stock, and that's fine. But the real gains in the market often come from identifying a shift in a company's DNA before the rest of the world catches on. Grab is shifting from a ride-hailing company to a financial technology platform. They are becoming the interactive brokers of Southeast Asia, but with a friendlier face and a more accessible entry point. Whether you use Robinhood Crypto or interactive brokers fees are your main concern, the logic remains the same. Follow the users and follow the margins. Grab has the users, now they just need to prove they can capture the margins. In summary, Grab is at a critical juncture. The market expectation is low, colored by past misses and regional economic struggles. However, the reality of their 2026 expansion into automated investing and digital banking suggests a company that is far more resilient and ambitious than its current stock price reflects. We see a stock that is hovering at $3.85, showing signs of life but still waiting for a definitive catalyst. That catalyst is likely the May 4 earnings report. If they can beat that 3-cent EPS estimate and provide a strong outlook for the Stash integration, the gap between expectation and reality will close very quickly. Grab is no longer just a way to get a ride. It's becoming a central pillar of the digital economy in Southeast Asia. Whether you are using a SoFi active investing account or managing your own Fidelity IRAs, keeping an eye on these international super apps is essential for a truly diversified portfolio. The authority in this space belongs to those who can see the transition from a service provider to a financial gatekeeper. Grab is making that move right now, and the market is finally starting to take notice. As we look toward the next few months, the focus will remain on how well they can manage fuel costs while scaling their high-margin digital services. If they succeed, the breakout alert that many traders are looking for will become a reality. Expect volatility, but keep your eyes on the long-term transformation of this Southeast Asian giant. Grab has the tools, the users, and the strategy. Now it's all about the execution in a high-stakes market. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, outshare with your friends, bell subscribe for more updates.